Picture this, you've just discovered crypto. Now maybe you're familiar with big names like Bitcoin and Ethereum, but you want to dig deeper, uncover promising projects and understand what they each bring to the table. If this sounds like you, you're probably asking the same question every crypto investor has at the start. Where do I even begin?
And I'm just saying, worry no more.
My name is Guy, and by the end of this video, you'll know everything you need to find the crypto of your dreams, including what to look out for, how to buy altcoins, and where to store them once you've allocated. So, stay tuned. Before we begin, you need to know that I'm not a financial advisor and nothing in this video should be taken as financial or investment advice. This video is purely educational and intended to inform you about crypto. And if you want to get more of this kind of content, then smash that like button, subscribe to the channel, and ping that notification bell. Now, if you're wondering what the heck is an altcoin and how is it different from crypto, here's the simple answer. Bitcoin was the first and is still the biggest cryptocurrency. Every other cryptocurrency is an alternative coin, or altcoin for short. The answer is a bit more nuanced than that, but we're keeping it simple for the sake of time and sanity. But before we go any further, I want to share a few words of wisdom. Chances are you've heard about someone who became rich overnight after buying a crypto that then skyrocketed in value. While this can happen, the reality is that it's very rare, and it's even rarer that it happens twice. Making money in crypto requires consistency. That means having a clear strategy, knowing which coins to hold, how much you'll invest, how long you'll hold them, and if things go south, how much you're willing to lose. As the saying goes, time in the market beats timing the market. In other words, steady, consistent gains will take you further than chasing one big win. And another word of wisdom is to understand the difference between a trader and an investor. Simply put, traders try to buy crypto at a low price, hold it for a short time, and then sell it for a profit. But that is easier said than done, and many traders actually lose money rather than make any. Conversely, investors will go the distance. They'll analyze a crypto's potential, buy once they're satisfied, and will hold, or hodl, until they're happy with the returns. And believe it or not, but hodling often yields similar rewards to trading, if not better. That's why we're taking the investor approach in today's video. And the last word of wisdom is diversification. Going all in on one crypto is generally a bad tactic, since if the price drops by, say, 30%, then your entire portfolio will take a hit. Newsflash, some cryptos can drop 30% in a single day, sometimes more. As such, it's a good idea to spread your portfolio across several different cryptos, preferably ones that fall into different narratives. That way, you balance your risk out across different sectors and won't get completely wrecked if one takes a beating or underperforms. And since almost everyone in crypto holds Bitcoin, it's probably worth making it part of your portfolio too. Now, if you're wondering where you can buy Bitcoin or indeed other cryptos, well, the answer is on exchanges. And if you don't have an exchange account already, then check out Toobit. It's a simple exchange with a huge selection of cryptos. And not only that, but you can also get up to $100,000 in bonuses and 50% off trading fees for life. How do you do that, I hear you ask? It's super simple. Hit the link down in the description or scan this QR code right here. This will take you to the Coin Bureau deals page for Toobit, the only place anywhere where you'll find those juicy bonuses. Then simply click the sign up button, which will take you to Toobit. And from there, you can register with your email or phone number. Once you're in, you'll see that you can instantly unlock rewards just by completing simple tasks, such as signing up, making your first deposit, and completing your first trade. And buying crypto with Toobit couldn't be easier. Just click Buy Crypto in the top left, and you'll be taken to this page. Then enter how much you want to spend, which crypto you want to buy, and add your credit or debit card.
It's that simple.
But this deal won't be around forever, so be sure to take advantage of it while you can. Only here on Coin Bureau. Okay, moving on, and before you buy any crypto, you want to do your research. To start researching altcoins, the best place to start is a coin tracking website. The two most popular ones are CoinMarketCap and CoinGecko. They each have their own features, but to all intents and purposes, they do the same thing. For this video, we'll be using CoinGecko. So, on the main page, you'll spot some trending cryptos at the top. But honestly, it's best to avoid this section if you're new. It's mostly for traders, and if a coin is already trending, you might be too late to jump in, and there's a good chance you could get caught out when prices drop suddenly. Now, below the trending section is a list of every cryptocurrency, starting with Bitcoin. And they're ranked by market capitalization, or market cap, which is the total value of a cryptocurrency. This is calculated by multiplying the price by the number of coins or tokens in circulation. The bigger the market cap, the bigger the project. Bitcoin has the biggest market cap, which is why it tops the list. And in case you're wondering, the difference between a coin and a token is that a coin is the native cryptocurrency of its own blockchain, like Bitcoin's BTC, Ethereum's ETH, or Solana's Sol. A token, on the other hand, is built on top of an existing blockchain, and sometimes on several at once. Examples include stablecoins like USDT and USDC, or meme coins like Pepe and Bonk. So, in case that didn't make it clear enough, there are a lot of cryptos out there. And that's why, before you start researching, you need to know which cryptos are actually worth your time. There are literally tens of millions of coins and tokens out there, mostly tokens. Now, obviously, nobody has the time to go through every single one, so you'll need to narrow down the list. The easiest way to do this is to sort your list by different narratives. To do this, click the Categories tab at the top of the list. Once you find a category that interests you, start exploring its biggest projects. Your next task is then to narrow down the list even further. You can do this by looking at a few criteria. First, the crypto should ideally have a low price tag. That's because it gives new investors the impression that a crypto is cheap and could therefore pump more, even though it's the market cap that determines how much a crypto can pump or dump. This ties into the second thing to check, and that is the market cap. This will determine how easily a crypto's price can move. The smaller the market cap, the less money it takes to push the price up, or indeed down. It's much easier for a crypto with a $100 million market cap to 2x than it is for one with, say, a $10 billion market cap to do the same. And this is also why smaller altcoins tend to be far more volatile. And here's a pro tip. Create a list of cryptos in your chosen category with a mix of large cap, that is, market caps over $1 billion, mid cap, more than $100 million but less than $1 billion, and small cap cryptos, that's less than $100 million. This will balance your risks and rewards. Now, the third thing to check is accessibility. To do this, head to the Markets tab and ensure your coin or token is listed on reputable centralized exchanges, especially those in the United States. After all, other investors need to be able to buy it for the price to rise, and the US has the largest share of crypto investors. And if you're unsure which exchanges are considered the best, then don't worry. Simply go to the top of CoinGecko's homepage, hover over Exchanges, and click Crypto Exchanges to check. Okay, so you've identified a few promising cryptos. You're now ready for step 2, which is to do some surface level analysis. The goal is to quickly identify whether the crypto you're looking at still has a pulse, or if it's basically dead in the water. Obviously, the quickest way to check this is by looking at the chart. You can view price action over the last day, week, month, 3 months, year, or select Max to see the crypto's performance since its launch. In many cases, you'll also see a live chart button or a trading view button for a more detailed view, though this isn't available for every crypto. Believe it or not, though, the price isn't the main thing to look at. That's because it's common for a crypto to have lots of activity in the short term, even if the chart looks flat when zoomed out. In fact, the cryptos that are flat are often the cryptos that end up pumping the most when money starts flowing in. But since you're already looking, you can check when your crypto last hit its all-time high and how much it's fallen since. If the drop lines up with the last market cycle, it's usually not too big a concern. But if the price has been flat for several years, that could be a red flag, and it's worth digging into what caused the decline later on. But again, price is just part of the story. Instead of focusing on the price, focus on the 24-hour trading volume on the left side of the page to see how much money is moving in and out of that particular crypto. The higher the trading volume, the higher the demand, assuming prices aren't plummeting. Just make sure to check where the volume is coming from, because sketchy offshore exchanges will often fake trading volume. Next, check the crypto's total and circulating supplies, which can also be spotted on the left-hand side. If most of the supply is already in circulation, there's less risk of new tokens flooding the market and driving prices down. However, some cryptos have no maximum supply, with new coins constantly being minted. This is normal and often part of an incentive system, but if that is the case, note it down for further research later. After that, check the project's social media activity. Links for this can usually be found on the left-hand side of the page for the cryptocurrency in question. If you can't find it, you'll have to look for it manually on X, formerly known as Twitter. Look for a decent follow account and active engagement, lots of comments, likes, and posts. A high follow account with little to no engagement is another red flag. Then check out how many people hold your crypto using a block explorer, which you'll also find on the left-hand side. To do this, you'll first need to see if your crypto is a coin or token by looking at the addresses. CoinGecko will tell you which ecosystem your crypto belongs to on the left-hand side of the page. On CoinMarketCap, the left of the screen will have a drop-down menu under Contracts. If the crypto is a coin, it should have its own native explorer, though these can sometimes be hard to find. If there's no native explorer, this is a major red flag you need to take note of. For tokens, visit the explorer for the underlying blockchain, like Etherscan for tokens on Ethereum. Just copy the token's address into the search bar, then click the Holders tab. Now, ideally, you'll see thousands of holders and no wallets holding large percentages, since they could suddenly sell and crash the price. The exceptions, though, are wallets marked with an exchange icon or this smart contract icon. And as a bonus, you can also check how many times the browser extension wallet has been downloaded, if it has one. Obviously, the more holders and the more app downloads, the better. So, assuming everything is looking good so far, it's time for step 3. Digging deeper. Doing your own research, or DYOR, can take time, but it is absolutely essential. And we've got a full guide on how to DYOR, which you can find right over here. We highly recommend watching that after this video. But for now, here are the basics. First, check out interviews with the project's founders and be ready to take plenty of notes. Ideally, they'll explain what the project is, how it works, why it was created, and its future plans. Pay close attention to how clearly the project is pitched. The clearer the explanation, the better. Next, look for reputable secondary sources that summarize the project. These can include blogs on the Coin Bureau website or articles from other trusted crypto media outlets like Cointelegraph, CoinDesk, Decrypt, The Block, CryptoSlate, and DL News. Ideally, the project should have been covered at least once. Then check the project's blog posts. Now, annoyingly, these are often scattered across different platforms, but you'll often find them on Medium or the project's own website, which are also often linked to on sites like CoinMarketCap and CoinGecko. Look for posts about past technical issues, past and future milestones, additional funding rounds, and AMAs with the founders. And this ties into the final check, and that's the crypto project's website and documentation. The website often only offers a surface-level overview, but it should be well-designed, clear in its purpose, and fully transparent. But to really understand the project, you'll need to dig into its documentation. Now, this can be intimidating, but the first section is usually beginner-friendly. A big red flag is if it's overly complicated or missing key details. If you noted earlier that the crypto has no max supply, the documentation will also explain the incentive model behind it. Usually, searching for key terms like tokenomics, minting, emissions, and inflation can give you an idea of why new tokens are being added to the supply. So, by now, you should have narrowed your list to cryptos worth investing in. So, step 4 is the exciting bit, and that's doing the buying. Now, if you're new to crypto, this can actually be a confusing process, so listen closely. Not every exchange will list the crypto you want. So, the first thing to do is to go back to the crypto's profile on CoinMarketCap or CoinGecko and check the Markets tab again to find a centralized exchange that supports it. Also, be sure to check which crypto is used to trade your coin, a stablecoin like USDT, USDC, etc. This is what you'll need to buy first when you make your purchase. Next, you'll need to create an account on the relevant exchange. But first, Be sure to check the Coin Bureau deals page for any exclusive sign-up bonuses or fee discounts to maximize your gains. Remember, the link is in the description below. And when signing up, you'll need to complete KYC, or Know Your Customer. This means registering your email or phone, providing some personal info, uploading an ID, and taking a quick selfie. You might also need to fill out a questionnaire to confirm you understand the risks. Don't worry though, it's all pretty straightforward. And once you're set up, it's time to deposit some fiat, that is, regular money like US dollars, euros, pounds, whatever. On most exchanges, you'll hit a Buy Crypto button. Sometimes you can buy your coin directly, but usually you'll need to buy the base asset you noted earlier first. In other words, you'll need to usually buy a stablecoin like USDT or USDC, since most cryptos trade against stablecoins. Once that's done, the easiest method is to use the Convert option found on most major exchanges. Select the base asset you just bought and the crypto you want to buy, enter the amount, hit Convert, and the trade completes usually instantly. Keep in mind though, this convenience comes at a cost, as the price might be less favorable than a manual trade. So if you'd prefer to do this manually, or if the Convert option isn't available, search the exchange for the crypto you want to buy, select the relevant trading pair, and hit Buy. You can set a limit order to buy at a specific price, or you can just use a market order which will place the trade at the current market value. Enter the amount you want to buy and confirm. Congratulations! You're now the proud owner of your first cryptocurrency. Well, almost. There's just one more step, and that's moving your crypto to a wallet you control. Now, this is important because leaving crypto on an exchange means it technically isn't yours. And if the exchange has problems or unforeseen technical difficulties, you could lose access to these assets. As such, you'll need a wallet that supports the crypto you just bought. Now, usually you can easily find this in the wallet section on, yep, you guessed it, websites like CoinMarketCap or CoinGecko. But if it's not listed there, the best place to look is the project's website or its documentation, where they often recommend trusted wallets. You can use a free software wallet, which can be a browser extension, a mobile app, or both. Now, these are known as hot wallets, meaning they're connected to the internet. They're free to download, but are naturally more vulnerable to online hacks. So, the safest option is cold storage, hardware devices you can buy to keep your crypto offline and safe from digital attacks. And as it so happens, the Coin Bureau deals page has discounts on some of the best hardware wallets around. Remember, the link is down below. Now, if your crypto is a token, you'll need a wallet that supports the underlying network. For example, MetaMask is popular for Ethereum tokens and Phantom is popular for Solana tokens. Note that many wallets, including these two, now support multiple blockchains, and there's lots of other wallets out there too. If your crypto is a coin, check which wallets support it natively. Often, this is a dedicated wallet built by the project's team, but some external wallets may also support it. Look on the project's website for a Wallets, Downloads, or a Get Started section, or you can check the documentation. Once you've found the right wallet, go ahead and set it up. You'll usually get a 12 or 24-word seed phrase, which you need to guard with your life. Think of this as the password to your crypto fortune. Write this down on a bit of paper, not on a digital file, and do not share this with anyone. If you lose this seed phrase, you'll lose access to your crypto forever, so keep it safe. Now, depending on which blockchain your crypto is on, you may also need to add that network to your wallet before receiving tokens, even if your wallet supports the crypto in question. You can do this easily with a website called Chainlist. Simply connect your wallet, find the network, and it'll be added automatically. We'll leave a link to Chainlist in the description to help you out with this step. And now for the final step, which we advise you to take extra care with. In your wallet, click Deposit or Receive. You'll then see a string of random numbers and letters. This is your unique wallet address, which you'll need to copy to your clipboard. Next, return to the exchange and click Withdraw or Send. Enter the amount you want to transfer, then paste your wallet address into the recipient box. Double check that the addresses definitely match and that the sending network matches your wallet's receiving network. If done wrong, your crypto could be lost forever. So, as a pro tip, do a small test transaction first. Yes, you could pay more in fees, but consider this an insurance policy. It's much better to lose a few cents than lose everything. After a brief moment while the transaction is processed and confirmed, your crypto will appear in your wallet. And that's it. Congratulations! You've just bought your first altcoin and taken full ownership of your financial future. Feels great, doesn't it?
Yeah, it feels great.
Keep doing everything you've just done and you'll be a crypto master in no time. Okay, if you found this video useful, show it some love by smashing those like and subscribe buttons and flick that notification bell too so you don't miss our next one. If you want to learn more about how to build your own crypto portfolio, then check out our video right over here. And if you want to start your crypto journey by avoiding the most common crypto mistakes, then be sure to check out the video right over here. Okay, thank you all so much for watching, and I hope to see you again soon. This is Guy, signing off.